Well, hello everybody, I'm L.A. Little, and this is your daily NeoTA wrap. We take a look at these markets, and we always do it from a neoclassical perspective. Each time we ask ourselves just one question: what happened today, and what does it tell us about the coming ones? Do the show 4 times a week, every Monday through Thursday, broadcast at or before 10 o'clock Eastern Time. Is archived on YouTube under the channel L.A. Little. You can subscribe to it. Anytime content's pushed, you get notified. Makes it nice and easy to stay up to date. And staying up to date right now in these markets is not a bad idea because they are selling off, and selling off large. If you were here last night, you heard me talk about the fact that I expected this market to sell down. And I read that off of what wasn't a lot to read it off of, right? And you know, so many times we've seen this market come back no matter what. Well, today it wasn't that way. As a matter of fact, it's kind of interesting because if you look at the high of the day, and I don't show it here, and you look at the opens, almost all of them are the same. They opened at the highs and they went straight down the rest of the day, down almost 2%. Russell was the best one, down 0.75%, but you had 1.7, 1.9, 1.85, 1.67, totally demolished. Big down day. Gold down again, another 0.5%. Silver down 0.5%. We had the bonds perk up again on kind of a flight to safety move. Dollar soars another day, 1% up. It's already up 3+% this month, and we're only a week into it. And you know, that's the story. I mean, if you want the story right now, this is the story. And the reason for it is the expectations are, you know, next week Federal Reserve meets, gives its statement. Expectation is that they will remove that patient language, and when they do that, Yellen has already set the table and said, okay, that doesn't mean we're going to raise rates, but it says we're going to evaluate it month to month, you know, meeting to meeting. That's enough to get people worried. You got Europe easing, you got, you know, China basically easing, you've got Japan, you know, kamikaze easing, you've got currency issues throughout Latin America. If you look at Latin America, they're getting killed as a result of this dollar because they hold so much debt that's denominated in dollars. So, you know, this idea that we can raise rates, these guys are on another planet if they really do it. You know, I said 6 months ago they wouldn't be able to raise rates. I reiterated a couple of months ago, if they do raise the rates, you know, talk about kamikaze, that is kamikaze, it's suicidal. Anyway, that's the spill today. That was a big spill. And if we look at the charts, it was pretty much straight down all day long. Let's start with the S&P 500 here. And so, what do we got here? Again, if you tuned in last night, I talked about the negative aspects on Friday of this bullish retest regen not holding. And then the fact that we came right back up into the break of the swing point low. That's called a bearish retest regen. In other words, it was bullish here before we broke under it. Once we got under it, because that low is sitting there, this becomes the bar, and that low becomes the test on the initial push, right? Came almost right to it. If we look at the numbers, that low broken was 2085.44. We got to 2083.49. So we stopped a couple points short of it, flipped around this morning, and just headed straight south. Volume expands again. We break under what was the prior, well, actually, you know, if we draw it correctly, it was really the range. Remember that I talked about last night, if we broke this, we were really going to cascade, and that's exactly what we did. So once we got under the low from Friday and could not hold, and then it was straight down from there. Now, let me clean this up and do it again. Now we're inside this range. If you remember, this was the range that had printed for, what was it, about 2 months there. It was middle of January, that was actually a month and a half. From January through February until we broke out, right, and got that ABCD up. Now we're back inside of it. So we're back inside the range. The big range is down here. That one we still haven't got back into, right? I mean, we'd have to trade all the way to the lows. That push now, notice it's changed this to sideways, and we're about to break here. It looks like we did that today, so now we're bearish. So we're bearish on the short-term time frame. If you look at the weekly, of course, we're still bullish, right? It's not that bad over here, and it's going to take a bit to break this thing down. That swing point now is that low from December. Remember when we had the December spill and then the Fed took us back up? That's 1972. We're trading at what are we at? 2044. So we're 70 points away, and that's where the support really lies on the weekly chart. On the daily chart, it's up above that, right? It's up in this area here. As a matter of fact, it's on that Fed bar. So here's the Fed bar. They started jacking it up into the Fed announcement, and then they ran it the next day back on December 15th or 17th and 18th actually. Now we're coming back. That's kind of the target here, but I don't think we're going to quite get there, and I'll show you why. So that's the S&P. Yeah, we got the spill. We talked about it. And when we talked about it, what we really talked about was the NDX. And we said the NDX was the one to watch. And really, it was Apple, right? Because you know, the closing thoughts last night was about Apple. And the point was is that this big bar yesterday on the announcement of the iWatch, and typically Apple sells down after announcements, that push, right, left some volume, a little bit more than it did on this bar here. So that bar there was the Feb 26 bar. We had 90, almost 91 million. We did 88. So we didn't have enough. We didn't stay underneath it. That said, hey, we could test the top again and go after this top. Or if, and this is what I ended the note with yesterday, if we slide underneath this and stay under it, then we can just bleed lower. And bleeding lower here could take you down to 119. And where do I get that number from? Well, if I go over to this chart, which is the weekly, 119.75 is that swing point high. The low is 116.62. If we come back within 6 bars, we could get to the low, and guess where that is? It's right into the support zone here. So on Apple, you know, we could take a bigger spill now as a result of what's starting to happen. But even that probably isn't going to happen right away, because why? We're coming into a retest regenerate zone on the NDX, and it's a bullish one, and it's the first time back. The high is 43.2245. That spill right at the end of the day took us almost to it, 43.2908. So we're only what, 7 points away. Why is that important? Well, if you've read any of my books, you know, I talk about the idea of a retest regenerate, and I talk about the idea that, you know, after you go more than 6 bars, in other words, the distance from here to here, right, if that's more than 6 bars, and this is way more, that typically will test just into the top part of the zone. Now, this zone is not that big, but the idea is that you test up into the top. Odds are very high that you'd bounce right back out of there, and it's very high because you have a bullish breakout that's confirmed, more than 6 bars, coming back into it the first time, right? Uno time. And when you come back in the first time, odds are very high that you're going to turn around and go back up. How far? That's a different question. It's just what is the odds that you flip around, and the odds are pretty darn good, like 82%. So when you see that kind of a scenario setting up, you know that you're getting pretty close. And the ideal case would be for this thing to gap down in the morning. But you know, I'm not the only one that probably knows this, and I suspect we're going to see some front runners try to get in front of this and try to get, you know, into the stocks in the morning. I wouldn't be surprised to see those early buyers, you know, fret a little bit, and they try to push it into the swing point high and test it. But I do expect that we're going to see buying come in as a result of that. And for that reason, I don't expect the S&P to fulfill that move down. I don't expect Apple to do that move down. I don't expect any of those things. I expect we're going to see some buying come in as early as tomorrow. If we look at the NASDAQ, the NASDAQ's much stronger. It's got farther to go. Now it could be that the NDX would test into the low of its swing point high, and the NASDAQ could come all the way into the top of this one. That also would be the first time back here. That number's 48.15 roughly. We're trading at 59, roughly 60, so that's 35 points. Or let me see, 60 and that's 45 points. So actually 45 points here is probably the index is going to be deeper. So that would be a stretch for this to come all the way back now. The more likely scenario is the index bounces, this holds, we get some sort of a small bounce or something of that nature, and then maybe we come back and test this on this particular index. On the Russell, we've already broken a swing point low here. That was reflected there. Now we're deeper into the bar, and here we're doing another retest regenerate off a prior swing point high that was broken, and this is the second time roughly, or yeah, it's the second time. So you kind of had one up here together, and when they're two bars apart, I just kind of was one, and now we're coming back the second time. Odds are not bad the second time back. Why was the Russell stronger today? Well, look at the chart. That's the normal place people should step up and buy. It's a decent probability that it's going to hold this price point on the second attempt, something like 60%. So it's better than a coin flip. Not great, but better. And that's what it tried to do today, and that's why this one was down a lot less than the others. And so it's 1.23%. So it looks like my the 0.75 at the opening of this show was wrong. It still was better than the others, but not as great as it showed on that opening slide. And I don't know why they can't get those numbers right, but they always seem to be wrong. I should remember that. Okay, so that's the indexes. That's where they're at. That's kind of how they look. Let's take a look at some additional information here after a short break, and we'll see why this market probably is going to find a bounce. The question though is, will it bounce very much and how high? We'll be right back.
At TA Today, we have many services that teach trading to our clients. You can use LA's tools to trade and/or learn how to trade alongside LA using his neoclassical methodology. To earn these free services with no subscription or charge, go to our homepage, click on either the tools and earn free services or trade with LA and earn free services. On this page, you can refer a friend. Fill out information about yourself and the friend you are referring, and you will earn up to 3 months of free service with no charge as long as your friend continues to be a subscriber. So remember, refer one friend and earn up to 3 months of free service with us. The more people you refer that sign up, the more months you earn. If you have any questions, let us know. Thanks from the TA Today team, bringing you tools and ideas to help you trade.
Okay, as we come back here, I want to turn our attention to the sectors. And the reason for it is, stocks make up sectors, sectors make up markets. Markets don't move without the sectors moving. The sectors don't move without the stocks moving. It's hard to look at all the stocks, even though I look through a lot of stocks every day. Most people, or most people that don't have a lot of time, are really just going to look at the sectors if they look at anything to get a broad perspective, and a lot of people don't even do that. But the sectors is a great way of looking at the market and saying, okay, what's moving this thing, how's it moving it, what's it going to do, how far has it gone, so forth. Usually in neoclassical thought, when you make a move diagonally like we have, and you break from a bullish to a bearish, and you do it straight away, odds are pretty high you're going to bounce, right? And I don't have numbers on that, but they're pretty high. You're going to bounce. So it's more of an anecdotal thing, but I haven't quantified it like I've done so many things. The other thing you look for is what's down here that would make a difference. And in this particular case, you actually have a high volume bar at the low, and the top of that bar is not that far away from that swing point low. And so this little zone here looks pretty strong to me. I suspect when this redraws tomorrow, it will redraw this way, and you'll actually see support come in this area as well as the area that it was in. That whole area looks like a pretty good area to get a bounce. That's the transports. That's one of the sectors going from bullish to bearish straight away. If we look, there's a lot of these that are doing this. Let's go to the financials. Financials break two swing point lows, right? Break it fast, push down. What is it coming into? It's into this bar. It's coming into that bar. Where's probably a good spot given the accelerated speed off of this break? Well, this area here looks pretty strong to me if it gets down that deep, but this may be one of those that doesn't get that deep because the rest of the market pulls it back up. So financials also showing some sort of an extension, although not as extended as we just saw on the IYT. Let's look at another one. How about the XLB? Here's the XLB coming back straight away. What is it doing? It's about to break two swing point lows itself. It broke this one already. That turned it sideways. And this one today, it's going after tomorrow. And it's coming into a swing point high at that level, which is a bullish retest regenerate. So again, multiple reasons to believe this is probably going to find support in this area and bounce for now. As you go through these and you look at them, no matter where I look, the picture is about the same everywhere in that there's something that says, hey, this is probably not a bad place to find support. So here's the industrial sector, right? Already turned sideways off a break of this swing point low. Here's the next one right here. So that's this area here. And what does that happen to be? Well, that actually happens to line up pretty well with the bullish retest regenerate. And this is after 6 bars, so you can see that this one actually, well, this is the second one, so this is a little different. There was one up here as well. But it's coming back, it's after 6 bars, it's accelerating, it's going to hit the bottom. If it doesn't after 6 bars stop at the top, it's got a very high chance of stopping at the bottom. That's where support zone shows, etc., etc. And so as I go through all of these, I can see from a sector perspective, this market's going to turn around. It's going to probably try to bounce. We may get some sort of a push in the morning. We may not. We may be close enough as it is. But that's the setup. That's why at the top of the show, I was saying it looks like these indexes want to bounce. Now I look here, I get confirmation these want to bounce as well, which gives me more confidence in the call when I say, hey, tomorrow we're probably going to bounce. And I'll come right back for the final thoughts and tell you how much I think it'll bounce. Okay, so as we come back here, the question is just how far can this thing bounce? I've already laid out the scenario as to why I think it'll bounce. Now the question is where can it bounce to? And if I just use the S&P because it's just as good as any of them, as a matter of fact, it's a little bit more clear on this one than the others. There's multiple places now where one can expect resistance. One is this prior swing point high, this prior Fed bar high. That's the first spot. But that one, these are a little older, they're back farther, they're not as recent, right? The TA Today charts has got a little thin line up here, right? And that one is actually the best one. And I'm going to clean this up and you can see it. And it's taking that swing point low, this attempted bounce, and it's saying, hey, that's going to be hard to get back over. That's where sellers really should show up and should try to press their news. For this market to actually make new highs, what does it have to do? It has to get back over this breakdown bar. That's always the case. Once you do that, you got to get back over your breakdown bar. So that would be the first kind of scenario on the way back. The other possibility here, well, let's finish this thought and then I'll come to the other side of it. So that's to get us all the way back and take new highs out. I don't think that's likely. The more likely scenario is it gets back up to here and fails on a bounce. If it gets that far, the other area that's going to be tough is right here. So you kind of have two spots that look like the hard spots to get over. Those will be the two to focus on. We'll see if it can bounce back above this one, because if it does, there will be a little short covering to take it up to the next one. But that's probably about as far as one can think, at least right now, as to how far this can bounce when it bounces. I think it's got a good chance of doing it tomorrow. It's not written in stone or anything, but it certainly looks like we're getting close enough to numbers, both in sectors and indexes, to let that happen. Now, let's talk just a little bit farther, and we'll cut it off for tonight. And that is what if that bounce fails, right? What if that comes down, gets the bounce, and let's just draw it out here. So we come down here, maybe we stop about there, we get the bounce, let's say we stop here. What does that do? Well, that sets up the possibility of the ABCD structure to do what? To take you right down here to these lows. Now, the reason I'm always looking at stuff like this is because that's where the danger gets greater, right? Because now this swing point low is 1988. This one is sitting at 1981. So 88, 81, and now pull over your weekly chart. So remember, 88, 81, and your weekly is what? 72. Not all that much farther. If we break this swing point along with these, that would be pretty bad. Now, if we bounce and we hold and we take a little while to do that, this bar here is going to print as a swing point low next. 1, 2, 3, 4, 5. If you get one more bar, you don't undercut that, you get another swing point low here. Now you've got two swing point lows on this time frame, the weekly, along with swing point lows, at least two, however many more may form. That could be big news. And so again, one has to look forward and say, it could be a problem. That's one way it could set up, right? But you're always looking, at least I am always looking neoclassically to say, where's the risk? How can it set up? I know the probabilities once the setup gets there. Now I just need to look for the setups. Could they form? Is the potential for them to form? And if it does, something to look at and something to concern yourselves with. Folks, look for a bounce tomorrow. Have yourself a great night. I'll see you next time. Tell a friend, tell two. I'm LA. This is and it was your daily NeoTA wrap. Have a great night. I'll be back tomorrow. Take care. Good night.